Video I'm going to present some of the most interesting things I've learned from Professor Greenwald. Hopefully this video will radically change the way that you look at investments and encourage you to look into Professor Greenwald's work further. It's fascinating and has made me a much better investor. Let's start with growth, which is almost universally misunderstood by investors. The sad reality is that most growth has no value. You see, growth costs money. You have to invest to grow. That investment has a cost called the cost of capital. When there are no barriers to entry, growth has no value, as the return on investment will be pushed down to the cost of capital. Only when you have a franchise will growth actually have value, because competitors can't enter the market to prevent you from generating excess returns. If you are trading at a competitive disadvantage, such that you don't earn your cost of capital, growth will have a negative value. In the long run, everything becomes a toaster, says Professor Greenwald. You can't look at a great product and forecast profits out forever. Eventually competitors will come in and your great product will just become a commodity. Just consider this list of once dominant or powerful businesses and look at where they are now. You also want to position yourself such that you are statistically on the right side of the trade. You want to be the smart buyer buying from the dumb or distressed seller. Remember, you're buying a stock because you think it will do well from someone that thinks it will do badly, unless of course they're distressed. You want to be right. The simplest way to do that is to become an industry expert and to fish in the pools that over time are statistically the best to fish in. Let me show you how to find these such pools. The first step is to shun lottery ticket stocks. Basically ignore everything that is expensive and glamorous. You only want to look at cheap and ugly stuff that everyone hates. That's where the valuations are going to be incorrect. So here is what you're looking for. This is where you find good returns. This is super counterintuitive, but the evidence bears it out. Professor Greenwald says, if you look at a stock and say, yuck, I'm not touching this, you have found a potential value opportunity. Though don't forget, some stocks are uninvestable at any price. You obviously have to be able to value the company to know if it's cheap. You should do this in a specific order. Start with the assets, as these are the best information that you have. Then look at the earnings power value, and lastly at growth, but only when the growth has value. Lastly, don't put too much weight on discounted cash flows. The numbers required are unknowable, and small changes in growth rates throw the calculation completely. Professor Greenwald is extremely critical of discounted cash flow valuations. And finally, I'd like to leave you with my favourite investing quote, which I think sums up everything wonderfully. The secret to great investing is having the market agree with you, but later. And this is from one of Jim Grant's friends, who he quoted in an interview with Forbes. So hopefully this is helpful for you and challenge your existing notions on investing and will help you become a better investor. I strongly encourage you to look at Bruce Greenwald's work. It is absolutely fascinating and his books are brilliant. So thank you very much for watching.